What are we going to talk about today?
I am kind of fired up still from the economic thing that we went to a couple weeks ago.
The forecast?
Yes, talking about,
lots of charts, lots of graphs.
It's very exciting.
But lots of really positive news also.
Yeah, kind of a surprise, right? Like when you watch the news, you think like maybe things aren't going to be so great for the millennials, or maybe, homeownership isn't the way to go. And it was so fascinating to see this grumpy economist so excited.
Very, very intelligent guy we've seen a couple times. And a lot of what he was discussing is how consumer confidence maybe is still playing catch up with what's actually happening in our market locally and nationally. And that, we had the government shutdown, we had a little shakiness in the stock market, some geopolitical issues, obviously, and yet I think one of his main things was that employment is still pretty strong overall, particularly in our regions. And so he was bullish on where things are going to go, that interest rates are not going to skyrocket this year, 2014, but they will be easing their way up, particularly as the government pulls back on its bond buying. And so the other thing that was really significant that he said was that nationally, the number of homes that are underwater at this point is below 12%, which is a really great sign. And obviously we're seeing that here in our market.
Well, because what does that mean?
Right.
That means that 78% of, wait.
Good math.
Yeah, sorry. I hate doing it in my head. 70% of people can afford to sell their house. That's huge. That's huge because people get relocated for their jobs. People have babies and need bigger houses. It's possible, and that's very exciting for us to hear.
It's also a significant change in the number of, say, short sales, or maybe even, we're not totally out of the woods yet, but foreclosures that will be in the market mix, whether you're a buyer or maybe you're a seller and you're worried about how your neighbor's home is impacting your property value.
It's so interesting for us to go to these, economic talks because we see everything on such a street level view.
Yep.
And I think it'd be interesting to talk about kind of what we're seeing, these trends we're seeing, our clients, what they want, what they're doing that's a little bit different maybe than their parents did.
And I told somebody on the phone this morning that what we see in our day-to-day business right now is nothing but a very, very strong market. I mean, so if you're out there trying to buy a house, ask someone who's trying to buy currently in our area how the market is. It's moving very fast. Yeah. So for what kinds of trends are you seeing, say, with first-time and move-up buyers?
I think people are sort of thinking a little bit differently about size of the house and then about payment. Have you observed that? Mm-hmm. There was a statistic, do you remember what it was, about percentage of household income spent on mortgages?
Well, I just remember that he said it was at the lowest level in 30 years.
The lowest level. I mean, it doesn't feel like that, obviously, because homes have gone up in value over the last 50 years.
And he made that point that was largely because interest rates were so low, and they will not stay that way forever. But some people are really taking advantage of that.
It's really exciting. I mean, where your parents might have spent 40% of their income on their house payment, now it's, you have couples spending 20% or 25% on their house payment, which is awesome because what does that mean? You can still go on trips.
Well, and we're
put in some nice light fixtures.
I've seen more people buy with 15-year mortgages, for example. Yeah. That's a great opportunity because the rates are so low, and then of course they're even lower when you go on a 15-year versus a 30-year fixed rate mortgage. People are being very mindful of how quickly they might be paying their mortgage off.
Well, and if you think about what that really means for your life plan, if you buy a home that's big enough that you can grow into it, in a neighborhood that you feel that you can settle into and you're 35 years old, and you have a 15-year mortgage, that means your house will be paid off, you'll be mortgage free at 50 years old.
If you need convincing on this, go online, find a mortgage calculator, look for a debt amortization schedule.
I think we could put one in the notes.
We could probably add a link to that. But just look at a $300,000 mortgage over 15 years versus a $300,000 mortgage over 30 years, and the difference in what you'll pay over the life of the loan and how much faster you will pay to the principal and not the interest. It will blow you away. It's certainly something to consider. I think the 30-year mortgage is such a standard that people need to realize there's some other good options.
Well, and one little trick that you can do, if the idea of getting that 15-year mortgage is a little intimidating, I know for me, I like to keep things flexible, you can get a 30-year mortgage and then make one extra payment a year that pays it off 7 years early. So, for example, let's make the math really easy for Marguerite, and your house payment is $1,200 a year. That means that if you pay an extra $100 a month towards principal, that's an extra payment a year, and then that's paid off 7 years early. I mean, What if you paid a $200 extra a month towards your principal? Like, you know, it makes such a huge difference in how quickly you pay off your house. And if you imagine life without a mortgage payment,
what else might you be doing?
Sweet, sweet freedom. I feel like we need a montage here.
Well, we can get to that later, the dream sequence of us frolicking on the beach somewhere. But there's also a lot of people, at least in our market, and maybe it's the type of inventory, but don't you have a lot of, say, buyers looking for things that have multifamily potential? Maybe
Yes.
maybe a basement
Oh, I
apartment.
didn't know we were going to talk about that. Yes. I mean, and this is actually...
Can we go here?
Oh, please, let's go here. This is actually kind of my passion.
Yep.
Maybe we should do a whole separate video, but this is actually what I would like to do for my next house, is live in one side of a duplex and rent out the other. And then your payment is half as big, and then that is happy hour money. Or pay down your interest money.
Don't be afraid to look around for some other options beyond just the 30-year fixed mortgage.
That's old school.
You might discover you could get paid off faster than you think.
Yeah.
Right on.
Good luck.